Hi, this is Corey Lowe from Queensland Trade Corporation. I'm just going to take some time now to explain to you exactly how our equity mortgages work and why they're such a fantastic opportunity for anybody looking to invest into property. Now, the first thing that our equity mortgages do is create a 100% finance opportunity. What this means is that you've got the ability to purchase property without using any of your own cash. We can also secure part of this property up to 50% of its value at an interest rate of only 5% per annum. Obviously, a lower interest rate means you heavily reduce your repayments and increase your return on investment. Now, business owners can actually further increase their return on investment by taking advantage of an interest-free line of credit available through Queensland Trade Corporation. Now, there's a completely separate video dedicated to explaining how that works. If you are a business owner, please take the time to look at that one because you will find it very, very interesting. Now, the types of properties that are available with our equity mortgages are everything from $500,000 units to $5 million properties and everything in between, so you're spoilt for choice. Now let's go into an example of how we put these equity mortgages together. We would work with a developer. We have a few that we do work with. Let's use an example of one who has 20 units for sale and he's trying to sell them all for $500,000 each. We would approach him and negotiate how many he wants us to sell for him, which might be 30% of his stock in this example, which would be 6 units. Now each of those units would have a trade component and a cash component. In this example it's 30% trade, and this is what it would break down to. The selling price is still $500,000, so the developer doesn't have to discount his stock, except now it's broken down into $350,000 in cash and $150,000 in trade dollars. Now to break it down even further, here we have those figures again, 500 broken down into 350 and 150. It represents 70% and 30% of the total purchase price. Now there's two companies that you're going to be working with our equity mortgages. The first is going to be Yellow Brick Road, and they're going to put you in contact with lenders who are going to get you the cash component. Now most finance companies are looking at an LVR of around 75% at the moment to remain comfortable and get the loan through without too many issues. This still leaves you with the problem of finding a $125,000 deposit in this example. Not many people that I know have that just lying around. If they do have it, it's in equity or something else like that that they don't particularly want to touch right now. So this is where Queensland Trade Corporation can come in and help. We're pretty safe with this first thing that the finance companies are looking for, because we're only going to be borrowing 70% of the purchase price, not 75%, so we're safe there. Now let's show you how you can take care of this deposit. So the developer said that he could take up to 30% trade in his properties. So Queensland Trade Corporation would actually lend you that 30% in trade dollars as an equity mortgage. Now this is the part that's secured at 5%, so you want to use every dollar here in trade into this property to bring down your interest repayments. So we would give that to you, and that would act as your deposit. So you've ticked both boxes there. As you can see though, you've got an extra $25,000 in trade left over. So let me show you how you can use this to your advantage. Obviously the developer will take 30% or $150,000 in trade. The finance company is only looking for a deposit of $125,000, so what you do is you just bump up your deposit from 25% to 30%. So you're paying an extra $25,000 as a deposit, therefore you're decreasing what you're borrowing by $25,000 and in turn decreasing your repayments, which is great. Also, if you did have any cash that you wanted to put in as a deposit, you can then take this off what you borrow as well. So here you've got $350,000. If you did have $50,000, you can invest this into the property and borrow only $300,000, which again will decrease your repayments even further. So let's go through the total amount borrowed and who it's going to be through and the interest rates, just so we're 100% clear how it all works. You've got Yellow Brick Road here. They're going to organise a finance company to give you the $350,000 minus any cash deposit that you might have. This is going to be secured at an interest rate of around 7%. It really depends on who you go through and what the going rate is at that point in time. And that's going to represent 70% of the total purchase price. And we've got Queensland Trade Corporation over here, who are going to give you $150,000 as an equity mortgage, and this is the part that's secured at only 5% per annum, and this represents 30% of the total purchase price of the property. As you can see, you've now achieved 100% finance, and you've secured 30% of the purchase price at only 5% per annum. Now this is going to save you thousands of dollars every single year. So there you go, the opportunity is now in your hands. I've shown you how you can purchase property without using any of your own money, how you can secure a large percentage of that property at an interest rate of only 5% per annum, and how you can significantly increase your return on investment. Now if you would like any more information, please don't hesitate to contact me. My email address is admin@qldtradecorporation.com.au. If you did want to call or contact us in any other way, you can find our contact details at our website, www.qldtradecorporation.com.au. There's also some extra information on trade and some other videos which you will probably find very, very interesting. So thank you so much for listening. I hope this helped. I will chat with you soon. Have a great day.